So let's talk about your gold outlook. You're seeing prices range bound in 2018, not much different than what we saw here in 2017.
Yeah, it's just an extension of this bear market you talked about. So on a secular basis, very long-term basis, commodities go through these periods of 20-year bear markets on average. That's using data back to the 1600s. So we kind of get stuck in year to year and the last decade of what's happened, but the history of commodity super cycles is we still have some time to work off supply. In the case of gold, you're looking at lots of supply still.
And if that's the case, we could retest levels last seen in December or in 2015, right? So gold was around $10.50 an ounce.
You got it.
But that would be an over $200 drop an ounce from levels we're at now, John.
Not something even my clients want to hear.
Right.
So, but that is the history, so I give them the data and how it works. So back in the 80s, when we peaked out at 800 and then we dropped to 250, there was a period between that 1983 all the way to the year 2000 where we retested that low of 250 4 different times before we finally came out of the bear market for gold, and then eventually went up to 1900. We're kind of in that same zone, but that low this time is 1050.
So what's driving the bearish case for gold here?
Yeah, it's really a commodity overall driven market. A lot of people like to say gold's different than silver, silver's different than corn is different than oil, because we do consume them differently. But the reality is when investors tend to walk away from commodities, they tend to do it in mass wave, and they tend to get out of all of them. So, viewers have probably noticed silver can't get out of its own way. Same with gold. And even though copper has risen recently, it probably has stopped its little rise too.
But many would say, John, gold is up about 12% year to date. Still one of the best performing asset classes. You know, does it just need, just give me a break here when we're talking gold?
Yeah, no, it's what happens in these secular bear markets, longer term bear markets, you do get multiple rallies. You looked at the 80s and the 90s, gold was stuck in a range, roughly between $250 an ounce to $400. That's the bear market. It bounces back and forth, but if you think of the rally from 250 to 400, that's a big gain.
So how much of a role has Bitcoin played in stealing gold's thunder this year?
Maybe a little, but I don't think it's as much as what's been put out there.
Why?
Because at this point, I see gold does have a little bit of a role as an alternative currency. I don't see a currency that's up 1,000% as a currency. I think that's just a speculative bet. I can't imagine at this point Bitcoin can really be classified as a currency. Maybe a commodity, maybe a speculative asset, but as an actual currency, which is where I think it would take some flow away from gold, I don't think Bitcoin's a real
I guess
currency.
the argument is that, people who are speculating, or who were going to enter the gold market now are seeing this rally in Bitcoin, jumping on the bandwagon, and so they're now preferring Bitcoin over gold.
Maybe the biggest victim there is silver. Silver is the one that's often taken as kind of the beta play on gold. If you're going to speculate on gold and you really think it's going up, let's play silver for the short term, and maybe Bitcoin stealing something, maybe the thunder away from.
So despite your bearish outlook on gold, if you were to invest in the metal, do you like a physical gold? Do you like the miners?
Yeah. Definitely the miners, and mainly because if you look at longer term, the miners' impact, you tend to have about 50% of the movement of a miner is based on the price of gold and what it's doing. The other 50% is the stock market. So if you believe in the stock market rallying, which we still see a little bit left before a little bit of a pullback, we'd say a miner.
And to specify miners, are you talking juniors? Are you talking the majors?
Yeah, at this point, because we are around the high end of what I consider the range for this year and next year for the price of gold, I'd probably stick larger cap, not the junior miners, because I am expecting gold to be down next year.
How many interest rate hikes are you forecasting for next year, and how will that play out for gold?
At this point, it's 2, so it seems to be very fluid, though, doesn't it?
We'll see what's in store. John, thank you so much for your outlook.
You're very welcome.
Thanks.
Thanks.